Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from mpiinvest.com. So, talking about the markets, of course, we did not have the market pulse video on Sunday because it was a Muhurat trading day, and of course, I did do some trade that day. And of course, it was a good day. If you look at what happened in all these days, and then we had the holidays in our office as well. So, today we are back after a gap of almost, Friday, Saturday. Sunday and Monday, 4 days, right? Okay, so let us discuss all the things that happened in the last few days. So, talking about the markets had a big gap up on Sunday. Naturally, on Friday, after the Indian markets closed, the US markets closed positive. So that was something good. But then, very important data that people were awaiting this week was the US CPI, Consumer Price Index. That is nothing but the inflation data. So that was something which was, of course, a concern that was coming yesterday. So that was something we were kind of playing safe. So on Sunday, because of Saturday's positivity in the US, we could see the market actually going up and going close to a higher 19,540, which is again close to a resistance. Now, from there, on Monday, we could see the markets actually taking the reversal. And if you look at where the Monday market closed is around 19,440, which is the same level where the markets Nifty closed on Friday. So basically, on the Mora trading day, we could see the market going up, and then next day it came back. So this is what happened on Monday and Sunday. So apart from that, after markets were closed for Monday, US markets were open for 2 days. That is Monday evening Indian time and Tuesday evening. So these 2 days, what happened is something which is very important to note. So on Monday, naturally, they were expecting the consumer price index details. So because of that, the markets were kind of flat. Now on Tuesday, the data, that is yesterday, the data came in, and data came in really good. In fact, people were expecting around 3.3%, but it came at a 3.2%. Now that was fantastic. So that is when markets just kind of shrugged off all the problems, and there was a huge short covering, and the markets have rallied huge in the US market. Now that positivity seen in India as well. So as of now, Indian markets are expected to open more than 200 points gap up, and that is going to be really big. So if 200 points from the previous close on Monday, that was 19,440, would make it 19,640. So the major barrier of 19,500 is kind of broken comfortably in the opening itself. So now what can be expected in the market is something very interesting to watch, because at this point of time, if you see, now the support will shift from 19,300 to 19,500. So 19,500 can be an important support at this point of time. And today, with such a big gap up, I'm not expecting the gap up to sustain. So there could be some fall, but then if it recovers and takes some support at around 19,500, we could see the markets actually going up further. So this is something which we can kind of expect. But then, is the market going to see a big rally at this point of time? I don't expect that. Why? It's a simple reason. That is, I've told you this earlier also. Until the interest rate cuts start getting into effect, the markets are not going to see a big rally. So in the US also, right now, the interest rates are at its peak, and that is something which is kind of holding back the markets. But then it is just the US markets have fallen so big when Indian markets were still in control. So that is something which is kind of getting recovered in the US. So Indian markets were already up. We are already close to our all-time high. So I don't see a reason why Indian markets can actually rally big. But of course, I'm talking about the short-term view. But if you look at a longer-term preview, I continue to be bullish on Indian markets, and that is something which I'm expecting. Like next 5 years to 10 years is something I'm expecting Indian markets to be growing really big. So that is something which is my confidence. But then, if you want to invest at this point of time, I would suggest to go for a SIP mode of investment than a lump sum, because markets have kind of rallied off too much. So personal feeling, I feel that there should be some more correction, and then market can go up, or it can kind of have a sideways movement for some time. So that's the reason I recommend a SIP mode of investment at this point of time. But then one very important thing is, of course, that nobody can ever predict the market. And same thing here, I don't predict the market. So only thing is that markets are always great, and that's what I believe. And definitely markets, would recover and over a period of time go up. Now that reminded me of something. Now, if you are invested in FD, right, it is actually time to move that FD to something better, because one very important thing is the interest rates are going to get down from next year. So whatever FD you have at this point of time, you might be getting the peak return, but then once your, how long can you lock your FD for? Maybe maximum 5 years. So after 5 years, what happens? The interest rates are down. You'll have to renew it compulsorily at that higher, lower interest rate. And the worst part is, if you're on a 30% bracket, the FD rates that is coming in the market is around 7%. So net 30% you pay as income tax. What you get is just about 4.8%, which is less than even, I would say just touching close to inflation at this present time. So even if you calculate the average inflation in India, which is about 5.5 to 6%, you are actually not even beating the inflation. That means you are actually bringing down the value of your money. So there are different ways where you can invest safely with a fixed return for a longer lock-in period, like instead of 5 years, 10 years and 20 years, or even 30 years. So of course we can help you with that. So that's something that you can connect with us to for. So, well, that's a different thing. But again, how much of exposure you should have in FD or a fixed return instrument is something very important to be worked out. If you don't know, or if you need support in understanding that, then of course do join with us, and we can help you decide your asset allocation so that you really don't have to worry about your future. So that is something which we can help you with. That's what MPI Invest is here for. So, well, there are a few things I had to share. And today being Wednesday and tomorrow is being the expiry, the markets, of course, I don't have to tell you this, markets have been volatile always at this point of time. And volatility is only going to continue. So there is no stopping on that. So let's see how the market behaves today. So based on that, we will take a few trades in our MPA Invest Club as well. And yes, we'll discuss more about the markets tomorrow. So even India's in retail inflation has actually come down. We are at 4.8%, which is fantastic, which is way below RBI's target of 6%. So things are looking good. And one major contribution to this lower retail inflation in India is because of the crude oil prices going down. So the way things are going on, crude oil prices are not expected to go much higher. That is something, which is expected. And also one hint I would like to give you is, I am expecting gold prices to calm down in the next few months. So that is also something that could be expected at this point of time. So if you're looking to invest in gold, I would say kind of again go in SIP mode. Don't go into lump sum investment into gold. And the best way to invest in gold is of course SGB, and that can open quarterly. So if you want to be investing in SGB, just let us know. SGB is something, the most safest way to invest in gold, because it is from the RBI of India, so Reserve Bank of India. So that's something which is very safe. So but again, it is advisable to go in a SIP mode. And how do we do that and when to do that? We can help you with that as well. Well, there is a lot of things that I had to share. So that's it for now. Wishing you all a great day ahead and a great week ahead. This is Srikanth Rajan signing off until we catch up tomorrow morning with more details on the market. So that's it for now. Goodbye. Have a great day. But before you leave, you know what to do. Do press the like button if you love the content that we share. Do share the podcast with your friends and relatives to help them learn and invest together with us. So this is Srikanth signing off. Goodbye.